everybody, or afternoon. Welcome to your Monday edition of the TraderMerlin Show. Ready for a great week. It's going to be a wild one, as you guys probably saw with what happened out there today. We'll talk about anticipating good data here in just a second. I want to give a big shout out to Larry Jacobson, who I thought was very generous to let me come and teach part of his class this past Friday at UCI. You know, it's always nice to see kind of the younger generation because they're the ones who will be steering these markets, steering our politics going forward. So we kind of mixed two classes. Larry does one on managing innovative teams is his class at UCI, and then another professor brought in his team, which was entrepreneurial, or his class, which is entrepreneurship. So I kind of mixed the two together and talked about entrepreneurialism, managing innovative teams, and kind of how when you have a new technology like cryptocurrency and digital assets, sometimes it takes a bit to convince your team, not only below you, but the team above you, about that type of new technology and something that's different. So that was a great time. Thank you, Larry, and thanks to all the students who may be watching right now. That said, let's dive into our topic du jour, which is anticipating good data. You should put that in as one of your hashtags. Maybe I will if I put fire Gary Gensler in there. We'll talk about that here in just a second. So you may be wondering why on earth we were rallying so nicely today in the broader market indexes. Well, my personal belief is it's just anticipating good data. I think a lot of people are expecting the CPI number, which comes out tomorrow morning, as well as the PPI number, which comes out Wednesday morning, to be better than expected, meaning more of a contraction in inflation. So, of course, if you have inflationary data starting to drop even more than expected, that means that the pressure is really off of the Fed to raise rates, and they may actually start to pause, which is pretty much where I believe we're going to do anyway. So let me real quickly run up some of that data, then I'll run through the top 7 markets here. Just so you know all the data stuff that's coming out. Here is Forex Factory. This is Tuesday morning right here. You can see the CPI numbers are expected to go from 0.4 to 0.2. Now that is on a month-over-month basis. If we do it year-over-year, that's the number right behind it. So I'm going to click on that one because I think it's a better visual representation. And notice how quickly we surged in June of 2020 from a 0.3% inflation reading all the way up to a peak of 8.3. Actually, I think it might be higher, 8.9% was the expectation. We came out at 9.1. So we went from a very low number to an extremely high one. And of course, as you guys know, my pet peeve was the printing of so much money, having gone from $4 trillion to $20 trillion in a period of just a few months is what caused that inflation. So thank you, Federal Reserve and Treasury and government. But the good news is we're seeing this drift down substantially. Right now, it's sitting at 4.9. The expectations based off of that CPI coming out tomorrow morning should be 4.1%, which would be all the way down. I'll put my cursor on it, all the way drop down to here. That would be pretty impressive if we got that kind of number. And I believe that's why you're seeing this euphoria, is they're really like, okay, inflation's done, it's subsided. Don't count your chickens before they hatch. I mean, anything below 4.9 would be viewed as positive for the markets. However, a huge drop could be a big surge in the markets, meaning that the Fed can actually start to really backpedal again and maybe even cut rates. Now, that's an extreme thought, but we'll get to that in just a second. So there's your CPI year over year. Now, the interesting thing when you look at PPI number, which comes out the next day, PPI doesn't release the data in a year over year. They just do month over month, which is so bizarre. But they're also expecting that to come out at a negative 0.1, which would mean producers have a contraction in their prices. Great. You know, that obviously is great for the economy. It means things are dropping in price, which we can buy more stuff, which helps GDP, and then that helps just growth, period. So all in all, really good news there. Now, the last piece, and I'll just show you right here, it says the Fed funds futures rate, or the federal funds rate, 5.25%. And we can see that that has been aggressively being raised. We've slowed down the last 4 meetings. An expectation is right now that we're going to stay the same at 5.25, but doesn't necessarily mean that's what it's going to be. So I think we could see some last minute shockwaves for our market. Again, any shock with that CPI number on Tuesday morning or even the PPI number could change the trajectory of the Fed's policy on rates. Now, right now, it's pretty much here at 72.4% that they're going to keep rates right where they're at. And it's been that way for about a week now. Now, there was a surge where we saw it actually jump to a 25 basis point raise possibility, but I have been sticking to the pause for quite some time. I think the chart that you just saw there, this one here, we're due for a pause. It's moved too aggressively. If you look historically, we've never had this sharp of an increase, at least in my trading career. Never seen anything where it shot up this quickly, this aggressively. So my big question mark for our markets and economy, as you guys know, is what's going to happen over the next 3 to 12 months, right? Because these have yet to come into play. These take, 9 to 18 months is what I was told from mentors. It could take a while to get there. And that could hurt our market. So that's the anticipating good data. That's probably why we had such nice markets today. People feeling warm and fuzzy about the inflation numbers, but it wasn't all warm and fuzzy. I'm going to start at the bottom and work our way up to the top. Here is your crude oil chart, which is still in that big pronounced downtrend. Now, back in April, we had a pop up above 82 bucks, which it was like, oh, are we now going to break out of this downtrend? And then it came ripping back down. My guess is you'll probably see it challenge these lows until something changes. You did have Saudi Arabia say they're going to cut production, but that still didn't have that much of an impact on the price. We saw it pop up to about 75 bucks on crude oil, and since then it's fallen 8 bucks a barrel over the last 6 trading sessions. So not looking so great for crude oil's chart here. Of course, getting into the summer months, this is great for anybody who wants to drive and travel because this could reflect lower gas prices, which I'm sure many of you would feel pretty happy about. Now let's go to the weekly here so we can see the bigger picture. It was looking extremely bullish all the way through 2020, 2021, and then we started to see that change in 2022 with a nice double top on crude oil right around 120 on the weekly futures, and now just been drifting lower ever since. So for me, the only really major number of interest here is this about 62.25 line. You notice we've hit that multiple times. We're getting pretty close to it now. If we get down below that, you could see accelerated move here based off of just the demand zone. Now, remember, commodities trade differently than something like Apple or Intel or Cisco, so it would be definitely different than an Apple breaking down below a demand zone, but that will bring in a lot of selling pressure because it's a very clear line in the sand for crude oil. What did Big Ep say? So the Inflation Reduction Act is working? Well, you know what's going to happen. First, they'll have press conferences and they'll say, see, the Inflation Reduction Act is working. It's working. It's working. And when inflation was really, really high because they caused it, they didn't put the figure it themselves. They were like, oh, it's something else. It's Russia. They're the ones that did this. And then now, oh, well, we fixed it. Yeah, well, it's, an easy way to fix it, stop printing money. It's the easiest way. Take some money out of circulation. That's your second step. Let's talk about, I'll check out the Australian dollar here in a second. So let's go back to our chart here. I'm going to work my way up. So crypto still not out of the woods. I do want to go to this real quick question that came in from, where was this one? From Michael. Michael says, sucks about the crypto mess. Is it true that the Binance CEO was laundering money through many shell companies? Well, I don't know if it's true that he was laundering through shell companies. I doubt. I don't know if it was laundering money per se. I don't think that CZ is that dumb. Were they using shell corporations? Sure. Who isn't using shell corporations? Now, to the extent to which they were doing stuff, I don't know. I don't know how shady it was, but that's what the accusations are all about, and we'll see. I think you're at, a very interesting point in history because now you're seeing companies band together to fight the SEC. There's calls to remove Chair Gensler. Not only that, but it's not just the companies complaining. You're now hearing senators step up and say, hey, listen, you're pushing jobs out of America. We don't want that. So let's work on some compromise here. So I am definitely in the Shinobi Brian category of fire Gary Gensler. I believe there's clearly an agenda here. If you saw the message from the Winklevoss twins, who are the ones who, in theory, started Facebook until Zuckerberg stole it from them, was the lawsuit. They started a company called Gemini, which is a crypto exchange. And they've said that the Democrats have pretty much shot themselves in the foot and will lose the election because of what they've done to crypto. Now, I don't believe that is true. I think it will have an impact. I think it actually may have a significant impact on the Democratic election results is their viewpoints on digital assets and crypto. So they've made it very clear that they're totally against it, right? You have a couple Democrats that are positive and pro, but the vast majority of the Democrats are against cryptocurrency and digital assets. And I think that the younger generation, regardless of Democrat, Republican, Libertarian, they're more open to alternative currencies. And by being that aggressive against it, I think they actually will do some pretty good damage to their party, but that may not be the only piece that could drag them down. Now, the second part to Michael's comment was, or this is Oliver said, so it was just announced that Binance is halting deposits and withdrawals on June 13th. That is not true. So what is happening is they are not allowing ACH anymore. So it has nothing to do with withdrawals and deposits. It's withdrawals and deposits of US dollars. So if you have US dollars sitting at Binance, or if you know anyone right now who has US dollars sitting in Binance, not crypto, but physical dollars, you would be encouraged to stop watching the show right now, log into your Binance account, and take every piece of cash that you can out of there. Because after June 13th, which is tomorrow, you will not be able to remove physical dollars. They're cutting the ties with the banking system, and that's because of the regulatory pressure that's been put on them. So their bank has basically said, we really don't want anything to do with you. We're backing out of our relationship with you. And that's just because the bank doesn't want to be tied into some SEC legal mess, and they're probably getting pressure from the Federal Reserve and the banks out there saying, hey, just get away from Binance for now. So if you have cash, that's what they're ceasing. They're not going to allow you to move money from your checking account into Binance or vice versa starting tomorrow. So get your cash out. You can still buy and sell. I actually transferred some crypto out of there last night, and I'm going to be moving the rest of it off tonight if I can. I unstaked my Ethereum, and yeah, Richie Torres is one of them. There's a few that are really good. Senator Loomis is another one who is she's awesome, man. I love Senator Loomis. But if you have crypto there, they're going to be a crypto-only exchange. They won't allow on-ramps or off-ramps into fiat, unfortunately. Now, that's just Binance.us. It's a different story for Binance.com, but I can't use Binance.com because I'm here in the United States with the most strict government ratings or regulatory ratings on crypto firms. It's just crazy. So get your crypto off there if you can. I will be moving mine. I had to unstake my Ethereum, which took 6 days. Hopefully that will clear tonight, and I'll remove the remainder of my Ethereum off of Binance, and then whatever happens to Binance happens. So fingers crossed for me, guys. I don't want to lose that. I've got quite a bit sitting over at Binance right now, and I just want to make sure I get that one out. Same with British Pound, Canada. Yeah. It's funny, Shinobi, I'm curious, is it for other exchanges as well over there? You have Binance.com. I think you can use Binance.com in the UK. I'm wondering if it's the same sort of pressure. And this was my concern earlier. I was mentioning that the US is looked at as kind of the financial leader for the world. And I know it's an arrogant thing to say, but it's a fact. I mean, when you look at the financial markets, the US has been the leader for a very, very long time, and I don't see that changing anytime soon. What was interesting is if the US does these steps, which is let's ban on-ramps and off-ramps into crypto markets, let's go after the exchanges and sue them for selling unregistered securities, then does the UK follow suit, right? Does the EU follow suit? Does Japan follow suit? Does Korea follow? So to what extent is this contagion or this virus that Gary Gensler is now spreading in the crypto space, to what extent does that go global? That's the one that's really interesting to me. Send it to Mike. Hey, Nicola, good to see you. Can you trade it over in Prague? I don't know what the rules are in Prague. The Italian in Prague over there. Nicola Rosolo. Hope you're having fun in Trento. All right, let me see. Just Binance for me. Cool. All right, so I got Oliver's questions answered. Let me go back to our chart here and work our way up that top 7 list. Gold on the day, slightly unchanged. Really not a lot of activity there. I'll zoom in just so we can see those candles more clearly. This is what's called a spinning top formation. The last 3 days on gold, this is 3 weeks, excuse moi. Let's go to the daily. There you go. So that's 2 days for gold, really representing a lot of indecision. And you could argue that what we saw Wednesday and Thursday with a big down day and then a big move up, right, represent indecision as well. You had 1 day of fear, 1 day of greed, now they're right back to, well, which way is it going to go? So that's what we've got cooking for gold. It was down 0.38% today. Nothing really exciting. I zoom out here a little bit. The chart has been fairly flat for about 2 weeks. And same thing with SLV. Silver had that shooting star on Friday's session, which was not good because I am holding a lot of silver. But my options on that expire this coming Friday. So we'll see. I have the 22.50 strike price. Let me throw that on the chart here for those who are following along with that trade. So I'll put that in there, go text, and we'll go Coordinates 2250. 1, 2, 3. There you go. So that's my strike price on all my silver. I've got quite a bit of it. Anyway, let's move on from that into the other top 7. So I'll read the Dow to you. Dow up 0.55%, had a gap up on Friday's session, and now just kind of rallying out of there. You know, what's interesting is we are right near that overhead supply level. So if I was to draw a line across some of these peaks here, it's not perfect, but we're pretty darn close to this overhead peak that is achieved back in November of last year and back into January of this year as well. So I guess good news for the Dow with regards to chart action. Now, I asked you on Friday or Thursday's show, I said, you guys want me to make changes to my top 7? Because, you know, I feel like having the NASDAQ, S&P, Russell, and the Dow is a bit redundant. And I think only 2 people sent in comments there. So here is the 2 comments that came in. Icon Trading says, get rid of the Dow, add copper. Skilled Stocksman said, get rid of the Dow, add the dollar index. So kind of curious if you guys would like those changes made or which one you would rather see. Would you rather see copper or the dollar added? I agree. I think the Dow should be removed. You know, if you think about it, all of the components of the Dow are in the S&P and the NASDAQ. So S&P we can say is our broad market. That's the market, quote unquote market. NASDAQ, you could argue, okay, that's your really kind of representation of tech-heavy industries. Then you can go to the Russell. I'm looking at small cap, and that gives you a representation of the smaller companies. So we can see the broad market without needing the Dow. So the Dow is out. We'll get rid of the Dow. I'm in agreement with getting rid of the Dow. The question is, what should I replace it? Now, you guys know I do talk about the dollar index. So in a way, I kind of am covering that pretty much every week. I feel like it's already kind of in there, but I can add it to that list. So what I'll do is I'm going to just get rid of the Dow right now. I'll move that down here to this watch list, and I'll take this dollar index and I'll move that up for now. So we could either keep that dollar index in there. I think that's probably one of the most influential to see the trends of the broader market. Copper is actually a really good one. I like Icon's it's a good point, but you know, which area? Because it's only one commodity, and it is the industrial commodity, right? It's the industrial metal, where it's a sign of economic growth. However, you know, you're starting to see that shift. It used to be that copper was used for housing and plumbing, right? It was the main plumbing pipes, copper. Well, that's kind of changed. Now people are using PTEX or really high strength plastics that have ability to expand and contract more so than copper did, which might make them better. They might last longer. So not really sure. All right, dollar index it is. I see most people saying, get rid of the Dow, scrap the Dow. I'd like both options, copper and... But Dave, you got to make a company. That would put me at 8. The whole goal was to stay at like the magnificent 7. I wanted to have a 7 in there. They haven't have it? All right. No, I wouldn't put lumber in there. You know, lumber's not really... First off, lumber's volatility is off the charts. And number 2, I don't think it really helps you... Certainly will help with some home construction, but you know, if that building project is using metal and concrete, well, that's not going to help you with the price of lumber. So while it's important for a very small segment of the market, copper is, you know, a much more widely used commodity than I would say lumber would be. How about the bonds and 10-year? That's a good one, Siraj. You know, I actually talk about that as well. So I would contend that lately, when I do these shows, I'm going to drag the 10-year up here as well, just because I kind of talk about this one already. I think you guys would agree that quite often I bring up the dollar index and I bring up the 10-year. Maybe I just put the 10-year in here and we have our top 8. So I'll have NASDAQ, S&P, Russell, gold, the dollar, Bitcoin, the 10-year bond, and crude oil. I think that might be a good representation there. So now we've jumped it to 8 things. You already did Dixie, so I figured okay, we already have 8. There you go. Fine, I'll leave it there, and I'll think about the copper edition. I think it is an interesting one. Christian says something like HYG might be good, high yield bonds. Yeah, they can, but I wanted, and it's a good point, Christian. I do like the idea, but I think that the 10-year is better knowing that, because that's kind of your risk, your quote unquote risk free, because it's government bonds, and that is the baseline for everything else, right? We can look at HYG periodically, but I'd rather keep the 10-year in there because it's a benchmark for so many things, right? Your 30-year fixed rate mortgage is based off of that 10-year. You could use TLT, which is 20 years, but that's more of a bond ETF, which again might be slightly distorted because of the fees and the composition of that bond ETF. So All right, I'll leave it like this for now. I'll think about adding in copper, but I like that we added the bonds in there. At least I have it all in one place, which allowed me to run through it real quickly. So we took up the Dow, we added the dollar index, and moved the 10-year up into our top 7, which I guess I should now change to top 8. There we go. Okay, so we were almost through our top 8. Let me readjust these ones here, and since now I have to go through all of them again, we're back to the dollar index. So we talked about the dollar index bottoming out and potentially bouncing at this area of demand, and lo and behold, you saw a nice bounce. Again, it tapped it today, so from a bullish perspective, okay, great. It looks like an impulse move that started back here on May 8th, rallied all the way up through May 31st, had a little bit of pullback, and now the question is, will the dollar get some legs and start to move to the upside here? Now, if the FOMC meeting on Wednesday says we're going to stop raising rates, that should have a negative impact on the dollar. Remember, the higher the rates go, the more desirable the dollar becomes. Now, it's still desirable because it's earning 5.25% compared to some other international currencies like the Japanese yen at negative 0.1. So every time they raise the FOMC number, the Fed funds rate, that carry trade, if you bought the dollar and the yen, you would actually be earning more and more money each time. So the higher that goes, the better. If they halt, you may see this a little bit of pain here for the dollar index as it may start to drift down. But I'll keep that yellow box there. I think that's where it's going to start to bounce and hold that demand zone going forward. Our 10-year, not really a big change today. You can see a lot of volatility for earlier session on the 12th. We already rolled into the new session here for the 10-year bond. But decent amount of volatility, but again, all of it's really depending on what happens on Wednesday. So this could be a calm before the storm type of scenario. Podium time, and it's all indexes. Russell 2000 was up 0.44%. There's your small caps. Technically, who cares? Didn't do much. Right, we already removed our small yellow box that was much lower. We broke through that one. The target expectation for me was right around 1930 on this one for the next move to the upside. And of course, given what happens on Wednesday when Jerome Powell speaks, we may get that right away. Silver metal, S&P 500. Look at that beautiful chart. It hit that overhead supply and it just ripped right through it. Now it's a question of where is this going to go? You know, you look back over to the left a little bit, and the only real, and I don't even think it's that great of a demand zone, or sorry, supply zone. It would be right about there. So I'll just leave that right there. That puts you between 4439 and 4500 on the S&P 500. Let me zoom out so I can move that box over just so you get an idea of how much further we have to go until we hit a strong, at least a decent supply zone. But more importantly, this is forming an ascending triangle, and it broke. Now, in theory, that should have a nice move to the upside. So the question now becomes, is 4,800 in play? Do we see that all-time high come back into play? Not ruling it out. Certainly is a possibility going forward. Looks bullish right now. Now, as I say that, the NASDAQ is one, in my opinion, that's setting up for a potential great reversal trade here. I'm kind of hoping it stays below this yellow box going into the FOMC meeting. If I can get an FOMC announcement that causes this to pop right up into that yellow box, I'll probably be shorting this thing and looking to short NASDAQ. I know it seems crazy, but I'm going to use that overhead supply zone because right now, if you listen to CNBC and Fox and Bloomberg and Jim Cramer and all these other agencies and news outlets, it's all very bullish, and they're saying how you're missing out by not being in. The rallies here, markets are doing so much better. It's tipping the scales, and I generally like to think the opposite of what people are thinking. So if the vast majority of people all of a sudden are very bullish on these markets and things are looking great, I'm looking for the opportunity to go short on this one. So we'll know on Wednesday. By the time I do the show on Wednesday, I'll let you know if I've built any positions here. But I am thinking about potentially shorting that NASDAQ, which I know many of you are going to be like, are you nuts? You're crazy. That thing is so strong, right? It's just real strong to the upside. But, you know, you do have that overhead supply zone. It's not the strongest because it's already been hit, right? This is a supply zone that was created actually back in February of 2022, and then it retested it back in March of 2022. So it's definitely not fresh. Is buying target at a new 52-week low, catching a falling knife, retouching a broken 4-hour support. Oh, you're talking TGT. I thought you meant as like setting a target. This is absolutely catching a falling knife. You know, you're dealing with a broken company right now because of this wokeness movement and this whole, you know, I guess polarization of U.S. citizens with regards to pride and LBGQT, XYZ, whatever the acronym is now. You know, I personally wouldn't touch Target. I think you'll probably agree that over time, Target will rebound. There's no way Target's going away. It's so heavily shopped at, and it's just people are boycotting it right now, and that will probably waver and subside at some point. But do you end up buying it? Let me put this on a weekly and see if there's any weekly demand zones. Well, right now you're at 126.60 on it. And you look over here, you have this nice sideways consolidation for quite some time. And you're almost there, right? The high end of that demand zone, I would say, or just consolidation, is 122.95. So another $4 lower, that might be a buy point. Now, is it catching a falling knife? Yeah, absolutely. It is catching a falling knife. But one of the rules that we'll teach at OTA is if you're catching a falling knife by itself, fool's errand. You'll probably get your hands cut on that one and probably lose some money. If you're catching a falling knife into a demand zone, then probability has shifted. Now, it's not saying it's a guaranteed thing, but there's so much pain going on with Target and other companies with that type of chart where they plummeting. Going into a demand zone, trying to buy, great. I would definitely recommend having some stop losses in place. Now, I may look at this one. I certainly want to check out the earnings. Now, earnings were a couple weeks ago, but just see when the next one is, so I might be able to determine what my strike price is and expiration. And I may sell some puts on Target because the premium's probably pretty good. You guys know I still have put options on AnheuserBusch, which some of you guys are giving me a hard time about that one. Like, oh, God, you're crazy. Don't buy Budweiser. Well, I have the $55 strikes on Anheuser-Busch that expire this Friday, and I got a lot of premium on it, so I'm happy about that. We'll have to wait and see until this Friday, but I think I only have 10 of those, 10 or 20, I can't remember, but I think it's 10. I hope it closes at 55.01. Be great, fine with me. I think, again, long term, I think Anheuser-Busch will probably be okay. They've got 500 different beers, so all this backlash because of what happened with Bud Light, fine, it'll blow over at some point down the road. Moms shop at Target, and they are more resolute in their boycotts than Bud drinkers. True. Yes, hell hath no fury like a mother's scorn, I believe is the phrase there. Oh, when have we heard all these rally cries before? Yeah, hear them all the time. You hear them all the time. And again, I try to think the opposite of what people are doing. It's worked for me over the years. And, just think of a spectrum of emotion in the markets. And 0 means people are so bearish. They're so scared. They're panicking. 100 means they're just euphoric and they are going to be buying whatever they can. Hey, Traders Army, good to see you guys. When are you coming back on the show? I don't know, is that Chuck, Corey, who we got here? If you get that spectrum of 0 is like absolute panic and 100 is absolute euphoria, find out in your mind where we are in that spectrum. Right now, I would say we're at like a 75, maybe getting close to an 80. I think there's a ton of euphoria in the markets. When I say markets, I'm referring to S&P 500, right? The broader markets, NASDAQ as well. So I think that when you get that extreme, that's when you got to start looking at going the other way. And so that's kind of what I'm thinking. And Big Eb is totally right. He says 52-week high for NASDAQ, shorting is dangerous. Absolutely. But Big Eb, what I'm going to be doing when I'm shorting that 52-week high, if we get up there. And I'm not shorting the 52-week high yet on the NASDAQ. I'll be shorting this high that goes back into March of 2022 based off that supply zone, which, again, is not a strong supply zone. But I just feel like the market's getting overextended on the NASDAQ. People are getting way too optimistic because we're not out of the woods yet. Just as a percentage move from the low of January to where we are right now on the NASDAQ, it's moved up 39.4%. Holy cow. Remember what I said at the beginning of the year? I think we're going to have a bullish, a bullish first quarter, a flat second quarter, and then third and fourth quarter we see some pain. Well, I didn't expect a 39% rally for the first 2 quarters. That was for damn sure. All in all, moving good. All right, I'll reach out to you, Corey. We'll get you on the show here soon. Be fun to have you back on, see what you've been up to. So, yeah, Big Ed, you're right. And if I do short this one, if I do decide to go and buy, I'll probably just buy puts outright because premium will probably be pretty low on those ones. So I will look to buy those puts directionally. I'll have a stop loss up above that level, and if it breaks it, I'll take my licks and move on to something else. Do you feel like the market's pullback, even on a good CPI, is a sell the news event? Everything feels super front run. I kind of think so. I kind of do. I do feel like there is this buy the rumor, sell the news. So, you saw today's action. Let's bring up that S&P. You saw today's action. Beautiful. I mean, this was such a great trending day. Here's the 5-minute. I mean, it doesn't get much better than that, right? Really, from the open, we had a little bit of weakness, and then the rest of the day was just rally, 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 rally. Again, that could stop abruptly tomorrow morning. 1 hour before the markets open, that's when you get the announcement for CPI, which, I've already mentioned those numbers. If we don't get the big decline that they're anticipating on CPI, you could see these markets start to tank. And I think I have a personal feeling it's going to be a negative day either way. I just think that the expectation here has been a little too extended with regards to inflation dropping. That said, I did go buy a dozen eggs yesterday, and there was a period of time where some of you guys were sending in messages like a dozen eggs in your neighborhood was like $8 a dozen. Man, I could have gotten two 18 packs for $2.99 each, so $6 for 36 eggs. Not bad. Prices have dropped significantly on a lot of stuff. Now, I also went by the meat department because I did buy myself a new barbecue over the weekend. I was like, I'm going to grill up some steaks. And I went through that meat case. I'm like, wow, the cheapest thing I'm seeing there is $8.99 a pound for a New York, or, man, expensive stuff for the old meat eaters. I guess I need to get some tofurkey and cook some fake tofu steaks. Oh, boy. Anyway. Let me see what else I had here. I want to make sure I had some. By the way, some of you asked about how to register for this event that I'm going to be doing in Las Vegas, which is building a crypto portfolio to prepare for the future, which I am modifying as we speak. I'm modifying it to adapt for government and the issues going on there. But if you wanted to know more about that, I can put a link in the chat, which will help you save some money. I think it's $50 off the admission fee there. So let me post that in the chat for everybody here. Put that right there. Bada boom, bada bing. There you go. There's a link to the conference up in Las Vegas, and I think it sounds like several of you are going to be coming up. So maybe the day of the presentation, we can get together afterwards and go have a drink somewhere. Although it's going to be at noon, but it's Vegas. It's Vegas. The turkey will give you gas. Well, if we could just find a way to harness that methane, we'd be doing good. Must be barbecue season. My brand new. Oh, you got the Traeger? Yeah. I was gonna go with the Traeger, but I didn't go with the Traeger. I couldn't see myself spending $1,000 on a barbecue. I just couldn't do it. I wanted to, but I couldn't do it. Do you have any thoughts on Activision? Lots of backlash today. Yeah. So, what was it? Is it Broadcom that's trying to buy Activision? And they put there's basically, they're getting sued for it, right? They're going to try to antitrust that thing. ATVI. Let me go up to the daily here. I did see the headline, but I didn't really read through it. I know that there was major issues there. The FTC. Oh, man, the FTC. Oh, goodness gracious. The FTC is pretty tough to fight, as I have seen personally. It says FTC asked court to block Microsoft from closing Activision deal. So it was Microsoft in that deal. I don't really see why this needs to be done. I'm curious as to what the argument from the FTC is. Activision obviously is a big gaming company, and Microsoft has a pretty big gaming platform, but there's plenty of other out there. It's not like this is the only gaming shop in town. So I'm not exactly sure why that will be, why the FTC wants to go after that one. Personally, just, it's for Plato out there, I personally will just stay away from it because I just don't know. I just don't know what the outcome is going to be here, and I can't have, for my trading, these types of gaps. So these are, approvals or regulatory issues that have been coming up. This was earnings right here. I've learned from personal experience that when the FTC is involved, nothing good will come of it, right? The FTC is a colossally inept organization. After what they did at OTA, I have zero respect for them. And I used to always like, Federal Trade Commission, let's protect consumers. I agree with that. But seeing firsthand what they did just blew my mind. Absolutely blew my mind. You drag your feet, never let they'll sue and then not allow you a day in court, and you're just forced to go bankrupt because of it. It's really terrible. Corey, I will be there. I'm going up Tuesday and Wednesday, coming back Thursday. So I'll be up there for 3 days, but I'll be driving Tuesday afternoon and probably leaving on the afternoon of Wednesday, or afternoon of Thursday. But I'll be up there. Yeah, Shinobi, it's sad to say, and I'm sure you got regulators over there as well. I just, when you learn about these agencies, you think good, right? I think that when I was in college, SEC is great, right? I want to see a regulatory body go after these insider traders and go after Ponzi schemes and fraudulent businesses. And sometimes they get it right. Sometimes they do shut down really bad people and businesses that should be shut down. You got to wonder, why did Goldman Sachs pay $4 billion in settlements? Why didn't anybody go to jail for that? That's the other part I don't like about this, is I can pay a massive fine and nothing happens to my business. Whereas really somebody should go to jail for some of the things that these financial firms have done, but the SEC won't do that, unfortunately. Yeah, we'll definitely do that. Let's talk offline, and we'll find some way to hook up there. So yeah, I wouldn't touch Activision. It's just too risky. If you know the FTC is going after it and going to shut down the deal. Now, they're not trying to kill the companies, just the deal itself. So that's better than the FTC going after a specific company. But yeah, I don't know why the FTC is going after. I have to look into that one. All right, let me see what other pieces did I have here. So I got you the link for the show. I'm going to bring up this one, and I'm going to apologize up front because I'm sure that this is a very sore subject, but I will dance around it very carefully. But Michael sent this one in. He says, I bought PayPal at the peak euphoria in 2021 and then watched it sink all the way to $59 recently. It has had a small bounce, but will it ever recover? Are any insiders buying this? I never thought it would get this low. If you have been in this trade, where would you have gotten out? I just keep talking myself out of not selling because I'm not wanting to, or talking myself out of selling because I don't want to take the loss, but damn it, I'm kicking myself I didn't jump ship sooner. Yeah. So, Michael, this is one that you have to learn from this one. You got to chalk it up to a learning lesson. And this is why I am so adamant about stop losses. Because it's the only thing that can prevent you from catastrophic loss. And in this trade, man, you got catastrophic loss going on. So, I'm just going to do this real quick. So, let's just look at this price chart here. And here's back in 2021, right? So, let's say it rallies up there. So, in this picture, you said you bought at the peak euphoria in 2021. All right. So that went from a low price of right around, call it $82, to a peak of around, it's going to be hard, 307. So this thing rallied 276% in a period of 1 year, less than 1 year. So right away, you got to tell yourself, okay, this might be a little overdone, right? A little overextended, a little stretched out. But if you bought it on the hard red edge of this chart, right? I'm going to leave that right there. Let's say you bought it right there. First off, two things. Well, I'm already contradicting myself. First thing I want to notice is, you know me, you guys know me well enough. What do you think I'd be doing right here as it came into this all-time high overhead supply? I would probably be shorting. Why? Because it's an all-time high overhead supply. I'm expecting there to be some issues, and there it's bouncing a bit. There's the supply zone. So this looks like the NASDAQ chart I was talking about earlier. So I would have been not buying here. I would have been shorting, but that's neither here nor there. So let's say you decided to buy up somewhere up in that yellow box, right? You said the peak, fine. Well, what you have to do is you have to set levels where you say enough is enough. So maybe if you bought it, let's say at 300, maybe your stop loss is 284. So you're going to risk $16 per share. But if you got out there, you could make the argument it's still on a big uptrend, right? Well, what is another level that might be? Now, this is a level way down here that I would say is almost too far. For me personally, it's too far away. It's $219. So that's basically saying you're willing to risk $81 per share on this trade. I don't think that I could tolerate that kind of pull down. But the reason I drew that one is it would now be below these most recent lows and certainly would have been breaking some moving averages. So I'm throwing a moving average here. Yeah, you got to 219. You would have broken the, I think this is find out which moving average this one is on my screen here. I think it's the 200. So at that point, you would have broken down below your 200 period moving average, right? You would have been out at least when it broke the 200 period moving average or broke 219. The point I'm getting at is, where was that point where you said enough is enough, right? Where was that stop loss? So let's just go and fast forward here. So if I did the 284, which would probably be where my level is, and only reason I say that is because I don't want to take big losses. So if we go right there, I'm stopped out, 284. Okay, fine. If I had 100 shares, I lost $1,600, no big deal. But okay, maybe I use the 200 period moving average. All right, well, you're out right here. You're out at a price of 264. You lost yourself $36 per share. That's $3,600. Oh, well, you didn't use that one. And now you're out when it dropped below this 219. You would have gapped down probably about 209. Now you're losing $91 per share. At some point, you have to have an out. You have to say, I'm getting out. This is it. Well, unfortunately, no, you didn't. And now you're stuck in a position that looks atrocious. And I agree with Margaret. Part of the reason that PayPal is not doing as good is competition. Every major network now has their own payment system. You got Apple Pay, you've got Google Pay, you've got, I think, the Pay app, you have Venmo, you've got Cash App, you have so many different things that I don't know if PayPal will get up there. And I know what many people would be thinking here is like, wow, PayPal, it's down so much. If I just bought it at $60, it could go back up to $300. No, businesses live and die. They change, they morph. So I don't know what I would tell you here, Michael. I want to say to just keep this one forever, but I would say if it starts to make some new lows, just get out. I don't think PayPal will go to zero. They have to innovate. They have to change some things about their business. But, we mapped out this descending triangle a while back, and it just keeps getting worse and worse and worse and worse and drifting lower and lower. So I feel like there's something fundamentally wrong. Yes, there's a lot more competition. Yes, there's a lot more alternatives to payment networks and PayPal. But I just don't see it getting back up here, that 284, 285 mark. So what'll probably happen on this, Michael, is you're going to end up taking a big loss. But I'm hoping that every single trade that you take going forward, every one of them, you're going to draw some line on your chart and say, hey, if it gets below here, I'm out. If it gets below here, I'm out. Or if it gets below moving average, I'm out. You need to have some sort of system in there that says, I'm going to get out of these specific trades. Now, an easy one. Maybe you don't have a system mapped out. Pick a moving average, right? And if you want to be the type of investor that says, I'd like to let things run for a while, okay, well then the 200 period moving average might be too much. But what if we put something on here like the 50 period moving average? All right, so I'll go out here and add a 50. So there's your 50 period moving average. Your 50 period moving average would have taken you out, well, pretty much at that 284 mark where we had the demand zone anyway, right? You've been out right in here. And in hindsight, you would have been thanking your heavens and your stars that you got out with that moving average. So that's just one way to use it. I think it's really important that you use stop losses on your trades going forward. And don't feel bad, Michael. I've done the same thing. They don't even make the chart anymore of this stock, but it was Exodus Communications, EXDS. Bill Clinton said this is a national treasure. It was a company that did internet security, and I was like, of course, got to have security for the internet. So I hook, line, and sinker fell for that one. And I ended up buying not a lot. At $80, I bought 100 shares, so it was $8,000. And I wrote it from 80 to 70, 60, 50, 40, 30, 20, 10, 5, 2, 1 into bankruptcy. So you're probably not going to do as badly on that trade as I did because I wrote it all the way into bankruptcy. But after that, you realize you can never let that happen again. This is something I thought was going to be a great company and just got obliterated on that trade. Those stop losses are going to help you. All right, I got a bunch of comments on that one. Hold on. Is Trust Wallet owned by Binance? I'm not sure if Trust Wallet is owned by Binance. I know that they do list BNB on there. I use BNB Trust Wallet, so I have some money on Trust Wallet. But I'll be honest, Chris, at this moment, I'm thinking of moving everything off and going exclusively to my Ledger, even though Ledger makes it sound like you're vulnerable there with your private keys. But yes, I have BNB sitting at Trust Wallet because you can earn, I think I'm earning 6% on staking for BNB. So I'm staking from that, but I'm not sure if they own it or not. Let's see. PayPal might get shredded in July when the FedNow comes out. Yeah, and that's going to be the biggest player, right? When you have that FedNow payment network, a lot of these companies might struggle. Now, I'm sure that Google Pay or Google will use their own Cash App there. That they have their own proprietary one, but some of these other alternatives will struggle. So, is that when it's rolled out? Is July? I knew it was coming real quick. Assuming you got on the right level, of course. Ganesh, stop loss for the short-term trader, right? Will you have stop loss for long-term holdings, given if it's a good stock? PayPal here was a good stock back then. Yeah, so there's always stop losses for shorter term. But if you're on the longer-term perspective as well, I personally will have a stop loss. Now, is it going to be the same distance, right? So if I'm on a, 10-minute time frame, I'm on a 10-minute chart, and the ATR every 10 minutes is like 30 cents, okay, I'll have a 40-cent stop loss. But if I'm on a weekly chart analyzing this, and the weekly ATR is like we'll call it $15, well, I'm going to have a $16 stop loss. So my stop loss will be much wider to accommodate that long-term perspective, but still going to have a stop loss anyway. Because you never know when things are going to turn. And to the PayPal example here, not only was it overextended, and we know that in hindsight, right? We didn't know that at the time, but you did have a double top after a massive move to the upside. So, it felt like it was ready for a correction here. What else do I have? Trust Wallet is a DeFi wallet, should be fine. Owned by Binance overall, but I believe it's independent. But I believe only Binance is US at risk. And it's funny, Shinobi Brian, we say that, but Atomic Wallet was supposed to be very safe as well. Non-custodial, right? You keep your private keys, and someone found the back door into that Atomic Wallet and stole millions of dollars. So just got me nervous because I'm not a code person. So I don't know what the code is for Trust Wallet. I don't know what it is for Atomic Wallet or Exodus Wallet. So unless you are someone who knows code, you're not going to know exactly how safe these are. And if it's written with code, most likely some good hacker can get in there. So I'm going back to my ledger and going to try to keep it safe that way. Let's see. Do you believe in the theory that the big players do stop loss hunting on the amateurs? Not really, Margaret. I mean, it's fairly easy to see where people might have their stops, and I think that becomes a predictable element for institutions. For the most part, we're all such small fish to the institution, to the real big guys. It doesn't really matter. It doesn't. It's more so they're going to try to use us to take the opposite side of their trade. That's the important part. So let's say, for example, I'm a Wells Fargo wealth management client, and we've been building up a huge position in a specific stock, or one of our customers says, I want to sell 100,000 shares of Microsoft, right? So I've got a client who wants to sell 100,000 shares of Microsoft, and they say, I ask them, what price? Let's just go look at Microsoft here real quick. All right, so you look at Microsoft, and my client wants to sell 100,000 at the current price, which is $332.80, right? So let's move that to $332.80. And I asked him, I said, what price do you want? He says $332.80. Okay, great. So what I'm going to do now is I'm going to issue upgrades if I can. I'm going to issue positive press releases if I can. I am going to use the level 2 screen. I'm going to bluff bid size to convince day traders that it's moving back up. So I'm going to push this thing to the upside so that I can now sell at a higher price. Because remember, my client said $332.80 is the price I want. So every penny above that is free money for my firm. So I'll try to sell it at $333, $334, $335. And I'm now using the order flow from customers and the markets to drive to fill my orders. So that's what I don't like about institutions. It's bluffing. It's using market manipulation techniques to get you to buy or sell securities, and they're usually the ones that are benefiting from those moves. Let's see. 200 period moving average is quite a popular one. I always love when a trending line and moving average, fib lines all line up. Yeah, 200 period moving average is great, but that is like the biggest long-term picture you can take. As an investor, I personally wouldn't use 200. I feel like if it crosses the 200 period moving average, it's already fallen so much. Right, if it's to the downside, way too much for me. Do you think stochastic RSI is a good odds? Are you talking them individually? There is a Stoch RSI indicator. I don't use that one, but I use stochastics and I use RSI. I like them, but honestly, you don't need them. You can look at stochastics, you can look at RSI on your charts, or you can just look at the price chart. You'll know if it's overbought or oversold. You'll know if it's trending strong relative to itself, right? So you can look at this Microsoft, for example. So Microsoft it's not even on here yet. I can look at RSI and say, I know it was above 70 on RSI. It was overbought, and it's just recently probably just dropped below it. Let me see. Where's my RSI? So there you go. It just peaked, almost peaked above 70. It was 69.54, and now it's starting to come back down. So it's just the trend would tell you that. Stochastics would have told you it was overbought. I liked them at the beginning, but again, I don't put them on my charts anymore. I always encourage you guys to do this. If you want to learn an indicator, then start like this. Bring up a chart that you don't know what it looks like, and let's go Apple. So here's Apple, okay? I can tell you right now, Apple's in an overbought situation. You can just tell because of how strong it has been. If RSI in fact measures how strong something is relative to itself, that's what RSI measures, then this is about as strong as you can get. So it's going to be a very high RSI reading. And here you go. The current RSI reading on this one is 71. So could it go higher? Yes, but it's technically in an overbought situation. Now that doesn't mean to sell. It just tells you that, yes, it's confirming it's overbought. Now I like stochastics better personally. Yeah, Shinobi, I'm the same. Horizontal lines, trend lines, mainly horizontal ones I like the best, and just learn what price set does. So for example, if you guys want to learn indicators better, do this exercise I'm doing right now. Turn that indicator off, bring up something else. Let's go to, how about US Steel? All right. So looking at this picture, obviously we're not going to have a strong RSI because it's been chopping back and forth and just kind of going sideways for a period of weeks. So this is probably going to be higher than 50. It'll probably be like 55 or 60 on RSI. Let's see how bad I was. Current RSI, 52.69. So it doesn't really help me here. But again, I'd rather you guys try to see what in your mind, let your mind tell you what the RSI looks like, and then add the RSI to confirm or not. All right, copper. Because I know skilled stocksmen want some copper. Where's my HG on here? HG, where'd you go? Uh-oh. Oh, there it is. So with regards to copper, I'm not a big copper trader. I've traded a few times in my career. I love watching it, but I don't really trade it, so just throwing it out there. What's been going on with it? Obviously, you've got a choppy, erratic price chart that goes back a couple of years on your screen. But as a shorter-term trader, all I really care about is this piece right here. Right? You've had from call it July of last year, it was on a nice little rally up. It peaked right around January of this year, and all of 2023, this thing has been in a downtrend, lower lows, lower highs. So from my perspective, I'm looking at this going, I'm expecting this to sell off again and challenge these lows at 355. All right, we're currently sitting at 375. It just felt like you had that shooting star on Friday's session, red day today. My expectations are that this is just going to continue to drift lower. We'll probably break that 355 level and make new lows, have a rally up, then new lows again. So it just feels like it's drifting lower and lower here. So that's all I got to say. That's all I got to say about that. Just feel like we're on a pretty decent downtrend here on copper. So that's where it'll probably keep going. Trend is your friend to the bend at the end, right? Last one. Let me real quickly get to this question here. Oh, there's two. One from KF. KF says, is Lance Breitstein true? 8-figure day trader. Do you know of him? I don't know of him. I've actually never heard of him. I watched a little video just to see what you were talking about. He seems like a fairly humble guy, and he might be an 8-figure day trader. Yeah, it might be. I don't know. The only way I will trust anybody's financial trading results is if I actually see all of their accounts, which means I need to see your tax statements, or if the FTC has subpoenaed your trading records and proven that you are a losing trader, as it did to the person that you guys know I hate so much, has documented that individual actually loses money as a trader, yet he still says he's a great trader and has a school. So the only way I would trust anybody's financial statements is if I actually got to see the full tax record, or if a government agency has subpoenaed those trading records, analyze them all, and spit out the results. So I don't know of the guy. I would go at everybody with a grain of salt. Anytime someone makes huge claims like that, it always makes me wary about it, which is why I don't make any claims about my trading. I actually did show you guys the results last year, which is an interesting one. But anyway, and there was one other piece here. This is to Betty. Betty, I apologize, I didn't get to this one sooner. This is when we had John Rowland on the program talking about the Powell hammer. And she says, is the Powell hammer a bearish engulfing candle formation? Yes, that's all it is. 2, when Powell speaks, or whenever a bearish engulfing candle formation prints, I assume Powell must speaks and want to confirm. No, what he was talking about with the Powell hammer is it's a engulfing pattern. Engulfing patterns happen all the time. In that specific instance, it was because Powell was speaking. So if we get another situation like that on Wednesday when Powell will speak again, where we get, let's say, a rally up into that announcement. Convenient, like we saw one today. Maybe we get another leading up day tomorrow. Powell makes his announcement, then it gaps up, and then we get the engulfing. He's using that as a long-term supply zone until it's broken. And that's all that Powell hammer was. All right, I am going to wrap up here. I did not intend on doing an hour show today, but as happens, I just got wrapped up in it, and here we are. So here's what's cooking for tomorrow. We already talked about it. You got consumer price index happening 1 hour before the equity markets open. If you're trading the U.S. markets, you also have a 30-year bond auction tomorrow, and I'll see if I can get Bill Addis on the program to maybe talk about the FOMC announcement later on in the week. If you're trading the British pound, you do have the GDP numbers coming out, but that's going to be late tomorrow night at 11 p.m. My time out here in California. So that's all I got cooking. Earnings, there really is nothing special happening this week. So it's all about the CPI, the PPI, the retail sales numbers, and the FOMC. Of course, we'll talk more about that later on in the week. So that's going to do it for me. Again, if you guys have any questions, comments, feedback, let me know. TraderMerlin@gmail.com is where you can email those, or put your comments down below any of the YouTube videos. I always love seeing your comments in there, so thank you those that did send in your questions. I know it'd take me a couple days to get to some of those, but I will do my best to get less. I got your question as well, which I need to get here, and I'll get to that tomorrow. So thank you guys so much. I will see you all to the Tuesday show. Take care.